is trading mixed on Wednesday. After a strong rally in January, crude prices have been hovering near the level of $88–89 per barrel for several days. So far, all attempts to consolidate above the mark of 90 have failed. It seems that market participants are cautious ahead of the OPEC Plus meeting. Traders expect the cartel to stick to its plan to ramp up oil production by 400,000 barrels per day each month. At the same time, the supply deficit is likely to persist, with oil maintaining high growth potential. The commodities market is still under pressure from geopolitical tensions, rising fuel demand and disruptions in supply chains. Today, traders will focus on crude inventories in the US, which are estimated to show a decline. The data will be released today, and only then will it be possible to forecast the further trajectory of oil prices. This is what the current chart looks like. Brent futures have slowed down their corrective movement near the level of $88 per barrel. After that, the price has slightly rebounded. Traders are aiming for the level of $90 per barrel. In case the quote consolidates above this mark, this will serve as a signal to buy the asset. Otherwise, the current downward cycle may continue. In the meantime, the ruble keeps rising against the US dollar. Today, its attempts to move higher look far less confident. The pair just seems to be following the momentum amid an empty news background. On the one hand, a slight decline in geopolitical tensions plays on the side of the ruble. However, the fact that no agreement has been reached yet creates more uncertainty. Besides, the mixed dynamic of oil prices puts additional pressure on the Russian currency. In such circumstances, the ruble may appreciate further, but at a very slow pace. If the geopolitical situation changes, the pair may well drop to 75 rubles per dollar. In the past 2 days, the dollar versus the ruble pair has been going through a downward correction. At the moment, the quote is holding below 76.50 rubles per dollar. Given the pace and the scale of the correction, as well as a calm fundamental background, the recovery of the ruble may soon slow down. The levels of 75.80 and 76.20 may act as pivot points. The gold market is also uncertain today. The precious metal was struggling to consolidate above $1,800 per troy ounce, but failed to do so. These fluctuations can be explained by the monetary policy tightening introduced by the US Federal Reserve. After losing $70 in January due to the Fed's decision, gold is still unable to recoup the losses. This Thursday, the European Central Bank is expected to announce its plans regarding the key interest rate, which may influence the trajectory of the asset. In the meantime, gold seems to have lost its growth potential as investors doubt its status as a safe haven asset. As for the technical picture, gold futures slowed down the pace of recovery in the range between $1,800 and $1,805 per troy ounce. As a result, the volume of long positions has decreased. Traders are now in a wait-and-see mode. It's better to act cautiously, since a flat movement is very likely in the channel between $1,780 and $1,810 per troy ounce. For some time, this may increase speculative activity on the asset. We hope that our review will help you choose the best strategy and gain profits. Have a successful trading session on Wednesday, and see you back soon.